Hi guys, Joseph from Intellect Finance. Today we'll be talking with Charbel from Kelly Partners about using different structures to purchase property and the benefits of using them. We'll also be giving some insider tips of preparing for your loan application and getting your loan approved. Charbel,
Joe,
good to see you. Please take a seat.
Thank you.
Charbel, appreciate your time. Thanks for coming in again.
No worries, Joe. Good to be here.
So what I would like to talk to you about today is using different structures to purchase property. So how people can purchase property using different structures.
Okay. Well, at the moment, Joe, I'm having lots of conversations with clients, mainly around probably trusts, and the big one is also superannuation. But with superannuation, you do need to go and seek financial advice initially before we sort of start any sort of process. So with trusts, ultimately, it actually depends on really the client's circumstances. Typically, I do go for a trust structure with property ownership, but ideally, it's actually, I sort of like to sit down with the client and actually really work out their circumstances. If, for example, the property is negatively geared, and that means it's losing money, a trust actually traps those losses, and we can't actually disperse them within to the beneficiaries. There's land tax considerations as well. A trust actually doesn't receive a land tax threshold, so you have to sort of weigh up whether the individuals, the beneficiaries, actually receiving a land tax threshold or utilising a land tax threshold. So that's important. The trust is very effective in terms of if there's a positive cash flow or profit in a trust. It's very effective in terms of utilising adult beneficiaries or potential beneficiaries with the trust to minimise tax.
We have previously done a YouTube video on superannuation, using your superannuation to purchase property. But yeah, if you could tell us more about the benefits in doing that.
So again, we have to sort of seek financial advice. That is a very sort of a hot topic, I guess, with clients at the moment. So you have to chat to a broker initially, and then what they do is typically work out if your super balance is high enough to basically cover the deposit and transactional costs. And in terms of serviceability, what they'll consider is things like the rent on the property, and also your super contributions going into the super fund that will actually service the loan.
A lot of people don't know that, I like to say self-employed people, that you can actually purchase the property that you're working from and actually lease it back to your company.
Correct. Everything has to be done at arm's length, but that is a very typical scenario with clients. So they would purchase a property that they're trading the operating business from and utilise their super to purchase, take out a loan, then obviously pay their contributions and the rent into the super fund to service the loan.
Okay, but one of the benefits I think we should emphasise on is that what happens after 65 when they retire with that property? What are the benefits in having that property in the self-managed super fund?
Okay, so recently the government announced that they're indexing the total super transfer balance caps to $2 million, and what that means is we can have up to $2 million each in super that is funding a pension. So assuming the property's worth, there's two members in a fund and the property's worth no more than $4 million, what that means is if you're 60 and retired or over 65, you met a condition of release, you can start drawing a pension from your fund, and the tax rate in the super fund goes from basically 15% to nil. And you can basically pay the members a pension. When they've met a condition of release, the pensions aren't assessable, not
so taxable. There's basically no tax payable on the funds that come out of their self-managed super.
Correct.
When they reach the retirement age.
And as long as they're under the transfer balance cap at the time, the super fund's actually not paying any tax as well.
What about capital gains tax? Do they have to pay, if they sell the property, do they have to pay?
Again, if they're in pension phase and they're under the transfer balance caps at the time, at the moment the government are indexing them to $2 million at the 1st of July this year. If you're under the caps, if you're over, you'll pay 15% tax on the excess. It's proportionate. Otherwise, you won't actually pay capital gains tax.
That's a big incentive.
It's a very big incentive. Superannuation is taxed concessionally, so it's a very powerful tool to minimise sort of tax in retirement as we sort of approach and leading retirement. It's unfortunately a lot of us sort of leave it too late in terms of trying to contribute to super. There's annual caps, and there are provisions to sort of make the most or catch up some contributions, but we can't leave it too late and try and contribute sort of 10 years worth of contributions a year or two out from retirement.
If people don't have enough in their super, can they make additional contributions?
So we have what they call concessional contribution caps and non-concessional contribution caps. And the difference is Currently the concessional contribution caps are $30,000, and that they are typically deductible, or someone's claimed a tax deduction for them. And the non-concessionals, the current cap is $120,000, subject to eligibility. That's after tax money. So on the way into super, that's not taxed, but no one's claiming a tax deduction for it.
So basically, if you fit the right criteria, we've got the right LVRs, you've got enough in your super. If you don't, you can make additional contributions, but it will maximize the returns when you reach retirement age.
In terms of the deposit, how much do people typically need?
At least 20%, but the banks like to see that there's some money left over, sometimes up to 5%, some want more, some less, but we can't utilize all the funds. Okay. Which is by you telling us that you can make additional contributions, we'll help the clients make that purchase using their super money.
And transactional costs, they have to cover them?
Yes, the costs have to be covered as well with the funds in the account. I mean, I'd like to make it easier for my clients to apply for a loan, my self-employed clients. How can we make it easier for them? What do they need to have ready?
Well, a good starting point, Joe, is just having all your lodgements up to date, all your tax returns and lodgements up to date.
So basically their BASs. I mean, the client, because the banks want to see 2 years of tax returns and taxes basically up to date.
Portals, ATO accounts.
ATO accounts, yes.
All cleared.
Okay.
That's really the starting point.
Mm-hmm. Going back to trusts, why would you purchase a property in a trust rather than in a personal name?
So tax minimisation is a big one, but we do have to consider, as I mentioned earlier, land tax as well. A trust does not receive a land tax threshold, but an individual does. So that means maybe the individual in this case could have already a property or two and utilising a land tax threshold.
What is the land tax threshold?
About $1 million in New South Wales, and every state varies. So they could have, obviously, there could be properties in various states. If you have two properties outside of this trust that we're discussing,
yeah,
you're already utilising the land tax thresholds because you already have two properties. So that may make more sense than maybe use a trust. But then, as we mentioned earlier, a trust traps losses within the trust. So that means that if it's negatively geared, we can't actually utilise or offset those losses against your personal income. They're actually trapped in the trust.
Okay.
And a big one is obviously asset protection. The world we live in, people are concerned about not having things in their own name. So trust gives us, it's a separate legal entity that gives us a lot of asset protection for litigation.
And is there a benefit in having a corporate trustee? So a corporate trustee is when the trust is owned by a company?
Yeah, a corporate trustee is exactly that. So it's when a company is acting as trustee of the trust,
yes.
And there is an advantage because the trustee is a legal representative of the trust.
Yeah.
And what you don't want is to be an individual, or what you should consider is not being an individual trustee because you are the legal representative of the trust.
So the asset protection is being reduced by using your personal name as a trustee. Charbel, so what are the advantages and disadvantages of using your super to purchase property?
So with the Bear Trust, as we discussed earlier, one of the main advantages is it's limited recourse. And what that means is if you were to default on the loan, the bank can only ever take the proceeds of the property. And if you were to have a pool of other assets in the super fund, shares, cash, no one can sort of take that away. But I guess the disadvantage is if you were to purchase a second property, for example, you can't use the equity from the first property for the same reason. The bank can only recourse or recall.
We can only use the amount of the money that's in the superannuation to purchase property. We can't use equity. That's correct. Yes.
Yes, they can't basically use the first. You can't even use you can't use the property.
Not like outside of super.
Correct.
So that's one of the disadvantages.
It's also an advantage too. It offers protection, but there's limitations too because you can't use the equity to purchase a second property, for example. You have to use cash.
That was very interesting. Thank you, Charbel. There was a lot of good advantages and disadvantages in using your super to purchase property and for trusts as well. Right. Thank you very much for your time, Charbel.
Thanks, Joe.
That was very insightful. If you are interested to know more about using your super or a trust to purchase property, I'll put Charbel's details below. And of course, we can help you in financing the transaction with our experienced team. So I'll also put a link for our services. That's the end of this video. I hope you got something out of it. See you on the next one. See you guys.